Welcome back to the Jenstead. I'm Mary. Today's Wednesday, October 1st, 2025. And today I want to talk about how just in the month of September, we saw a $1.6 trillion credit bubble burst. And that burst was a result of two U.S. firms that collapsed just in the month of September. So we'll go into who those firms were and why we should be concerned about that. Because when these credit bubbles burst, the ripple effects can be very significant. And a lot of times we don't really know what the ripple effects are going to be until it hits and we're able to read about it in the news. So the first one I want to talk about was on September 12th, I believe was the date. I could be corrected on that. Tricolor Holdings collapsed and filed Chapter 7 bankruptcy, a liquidation move that signals the end of its business. And I talked a little bit, I referenced this company and the collapse in a previous video and just touched on it, but I wanted to go into some more detail because there's more information that's coming out and the significance of this combined with the other collapse. And I'm going to be sharing some of this article from Consumer Affairs, and it was written by James Hood. And I thought he did a good summary of what happened with Tricolor, as well as I have some other data to insert with that as well. But Tricolor was once the 7th largest used car dealer in the country. This company focused on refurbished vehicles that they sold to customers with poor and or no credit at all, focusing on Hispanic communities in California, Texas, and Arizona. In 2023 alone, Tricolor issued more than $1 billion in auto loans, many tied to undocumented immigrants, according to bond rating reports. So if we have undocumented, they're servicing loans to undocumented immigrants, and we've seen undocumented immigrants moving out of the country. What do you think they're doing with those vehicles? And also their subprime lending, their rates were about at 20%. So obviously when you have subprime lending, they're charging astronomical interest rate fees to those consumers. And the article went on to say, the company's risky but profitable model began to unravel. Borrowers defaulted, turned in vehicles, leaving the lender exposed. And then the signs of trouble accelerated quickly. It's like these domino effects, one thing after another. And it says the damage from this collapse stretches far beyond used car lots in the Southwest. JP Morgan Chase, Barclays, and Fifth Third Bancorp are among major banks facing exposure. So that's very significant. And one of the articles I read is these banks were coming in on these car dealerships trying to get their the vehicles that they had loaned them money on loaned to the company, to Tricolor. Fifth Third alone disclosed a $200 million loss. This is kind of what set off the alarm bells. Loss tied to what it called alleged external fraudulent activity. Some cars offered as some of the cars that this company owned were offered to multiple lenders as collateral, and that's referred to as double pledge scheme. So that was a setup for disaster. And additionally, Tricolor's collapse has left over 25,000 creditors in addition to JP Morgan Chase, Barclays, and Fifth Third Bank, 25,000 other creditors affected. And it said that losses could be anywhere from $1 billion to $10 billion. So the creditors are trying to reclaim their asset if the car can even be found. And this company was not operating their business in an up and up manner, and it's catching up with them. But the problem is then the fact that they're not doing business properly will affect so many other people and involves billions of dollars, and banks and so on and so forth in these subprime markets We saw during the crisis in 2008, they had to bail out the banks. They had to bail out the car dealerships because there were people defaulting. And in this article, it goes on to, he talks about specifically here, it's part of a larger picture. He said for credit cards, the 90-day delinquency rate showed quarter-over-quarter growth of 2.1% between the first quarter of 2024 and the first quarter of 2025. And then the auto loan situation is particularly concerning. Americans are behind on car payments at a record level, with subprime borrowers especially struggling. Even prime borrowers are experiencing increased difficulties, with 60-day delinquencies rising to almost 0.4% in January of 2025, up from 0.35% in January of 2024. And these concerns are something that have been expressed that they'll be by credit rating agencies to be persisting. Now, the second business company that I wanted to talk about specifically, and revolves around the auto industry as well. First Brands Group initiated its U.S. Chapter 11 bankruptcy, and First Brands Group is an auto supplier, and specific brands that they are auto suppliers for, hold on, let me grab this real quick, are ones that you all would be familiar with. It says First Brands is pretty huge. In addition to owning Fram Filters and Rebestos Brakes, the group also owns brake brands Centric, Carlson, and International Brake Industries, towing equipment brands Bardman, Bulldog, Draw-Tite, Fulton, Reese, Taconcha, sorry if I mispronounced that, Westbar, and the towing division of Westphalia. It also owns windshield wiper brands Anco and Trico, and so on. And you can, if you're interested, you can find articles that go into more detail as to all the companies that they own and or supplier for. So this auto supplier was $6 billion in debt and had $4 billion of off-sheet liabilities. And so basically what they were doing is getting loans, but not disclosing all of the financial commitments that they had. So the lenders weren't aware of all the other financial responsibilities. And so basically this company just spread themselves out so thin that they could not keep up any longer. And so this will have financial ramifications, a ripple effect. So it's also going to put a strain on aftermarket car parts and availability. And while they're going through, the previous company is going through Chapter 7 liquidation, this is going through a restructuring, but still that's going to be a hiccup because they've got to clean up their books. And they also have to make sure the supply chain, we'll see what kind of impacts it has on the supply chain. So if you work on your own car and use aftermarket products, it might be difficult in the days to come to be able to get your hands on what you need. And then if you can, the price may be going up. So that might be something to think about. But this also will have a ripple effect through the financial industries, as far as any of the corporations, any lenders that had loaned money out and they were not getting it, and they were not aware of the financial straits that that First Brands was in. So unfortunately, and these are both combined, again, as I said at the beginning, this is a $1.6 trillion credit bubble burst, just with these two firms. And I think this is kind of something we're going to see continuing happening in the future, because the consumer continues to be strained. In fact, there was an article that just came out, consumers' top purchase pain points, groceries and gas, new report finds, but it continues to say that the consumer is just strained between inflation and the stagnant wages, and or not being able to find a job, or with the layoffs and just the inflation across the board, be it at the grocery store, be it at the gas pump, insurance costs, pretty much everywhere. and there hasn't been any relief, and there's been a consistent uptick in it. And so you're going to see this impact, obviously, the subprime market. People are not being able to pay, they're not able to pay for their loans, so that ripple affected up to Tricolor, because they were depending on their consumer to be paying their auto loans. And you're also starting to see that in the prime market, where people are not able to keep up. The cost of owning a vehicle, of purchasing a vehicle, has increased significantly. And I think the average auto loan or monthly payment is like around $500 a month just to have a car. That's a lot of money. And so people are seeing the cost of everything go up, and eventually this is going to break. And that's what we saw happen when it happened in 2008. Once that snowball started, it just kept going and growing bigger and bigger, and it locked up all the credit markets. So just wanted to put this on your radar, something to pay attention to, and even more reason to just be prepared and protect yourself and your families from what's going on around us financially that we can't control, but could potentially affect us, and the costs of everything, and or bank closures. And if you have bank closures, that's a whole nother mess, because if you have bank closures as a result of some of these bubbles bursting, I've talked about that in previous videos as well. So what do? You stay prepared. Make sure you keep some extra cash on hand if you can, if you have it. Get out of debt best you can, but put some extra food to the side so that you're prepared. And that way, the better prepared you are personally, whether you can weather the storms that are going on around you that you don't have any control over. So, and on top of it all, our country is still almost $37.5 trillion in debt. And anyway, so that's something to keep in mind. So even more incentive for all of us to buckle down and be prepared. Hope you found this helpful and interesting. I thank you for watching. Please like and share, and I look forward to talking to you again soon.